So hello everyone and welcome to the trading course. Thank you very much for joining the team. My name is Mo. I run the Trades by Mo YouTube channel. I share a lot of free content on there. Some paid indicators, but mainly free. And in this course right here, I'm going to be sharing exactly how I make my money day trading. This stems off the original course that I released. I believe it was about 2 years ago now. It could be a year and a half. I could be completely wrong. I don't know. But this definitely will be a different style of content than you're probably used to seeing me make. This will be a bit more long formed, and I'm going to try and give as much information while keeping it simple because it is a fairly simple topic. If you haven't traded before and you're like super new to it, then I would recommend checking out babypips.com. There's a full like beginner course on that, just like how candlesticks work, like sessions, all that sort of thing, how to buy and sell trades. But I'm assuming if you've bought this course, then that means that you've either had to go at a demo account in the past or blah blah blah, but you either know what trading is, or you've probably placed a demo, or maybe even live, or maybe even funded trade. Maybe you're a trader that is struggling to get profitable. So hopefully I can help with that, and I think I definitely can. There is a lot of content online that will show you all of these all these types of strategies and promise the world and back. And yes, granted, I put out content and it's results that I definitely have got, but things like thumbnails and titles, you have to stand out, so it is a tricky one. And it is it's a circle that repeats itself on YouTube with like the whole clickbait and all that, but I'm getting away from this. Basically, this is my personal trading course, so let's get into it. So like you already know, my name is Mo. I have been trading now for I'm going to say about six or 7 years now, I think it is. I first got into crypto. That was my original segment. That was my my gateway drug into the trading space. I actually got into crypto through my mother's partner at the time when I was maybe 16 or 17. I might have been a bit older than that. It was a long time ago. I can't remember names and dates, but I got in before one of the big Bitcoin booms. And I used the Coinbase account. I started with crypto. I bought Ethereum and that, and then I got introduced to the altcoins. And I remember I bought into Neo, which was like £4 or £5 a Neo coin. And I remember opening I think it was Binance, or I can't remember. It was a long time ago, but I remember opening my account balance one day, and it was about £1,500. And I couldn't believe it. And from that point on, I was hooked. I later did lose that. I didn't pull it out in time and lost most of the profit, and then eventually pulled out in maybe 200. But that was how I got into it. And then I moved away. I tried going into the e-commerce space. I actually made a couple sales on that. I remember the first product I actually listed was an e-commerce Rick and Morty style hat, and I remember hearing that first Spotify ding come up on my phone. I was at home and I was so excited. I'm sure a lot of you want to make money, but you could be all over the world. That's the beautiful thing about the internet, and it is such an easy yet complicated space to make money. So I'm lucky enough to know not the secret, but one of the ways that you definitely can. I'm lucky enough to know this, so I hope that with this knowledge I can fuel you and point you in the right direction. So my trading with Forex actually started through Steve Marrow. You may know him, you may not. He runs a course called Beat the Market Maker, And through an online friend of mine, I actually got into a private Discord, and we used to do these like Monday to Friday morning calls and trade and learn his strategy. Some of this course right here actually stems from that Beat the Market Maker strategy. It's not exact, but one of the types of trades inspired this kind of style of trading, and then I've added other tools in and other things, and you'll now see that it's evolved even more. Trading's always it's always evolving. But okay, so let's check out the chart. And I'm going to show you pretty much what the previous strategy was. It's not changed miles, but there's definitely a few bonuses in here that are well worth your time, as well as a scalping version to this strategy. You could technically take this up to a higher, like daily chart, but I trade on the 15-minute time frame. I always have. But if you like the scalping style, if you like to, sit down for an hour or two and scalp some trades and get out, then that strategy later on is definitely going to be for you. Okay, so let's check out the chart. Let me just get rid of this here. So this is my this is my, what am I talking about? My my chart. And so let's set it up. So we're on the 15-minute chart, and these indicators right here that I currently have on, the main one that you want to focus on is the EMA. So that stands for exponential moving average. And if we just type in, I think if you type in EMA, yeah, moving average exponential, you can either add this to your chart, or if you have the free version and you want to compile it in as much as possible, then you can add this one right here, the 20, 50, 100, 200 EMA, because we use the 50 and the 200 EMA for trading. So you'll need either two of these indicators or just this one right here. But we can see on the chart we have the blue line, which is the 50 EMA, the 50 exponential moving average, and then this white one is the 200. Now this is very similar to the previous strategy. These blue boxes represent the Asian sessions. I don't trade during this time, and I have pairs that are relatable to the rest of the day for me to get the most amount of volume. And then these lines right here are obviously just simple days of the week. So this is pretty much the chart. And then the other tool I use is the Fibonacci retracement. That's up here on the screen. So if I just click that and I'll just simply draw it out, we can see we've got this white line, these yellow lines right here, and then these two green lines. I don't tend to use this bottom one here, not much anyway. But I will be showing you a higher risk to reward ratio trade that you can take with this as well. I think I've got an example that I want to show you where from a week or two ago, I think it was, the trade actually did like I think it was I could be completely wrong, but I think it was a 21 risk to reward ratio. Absolutely insane. But with some of those examples, you can see anywhere from 10 to 15 to 20, 25 risk to reward. Some of them go for a very long time. But besides the point, so we've got the Fibonacci here. And if I open the style, these are the boxes that you're going to want to tick on and make sure that the numbers are set to these. So if the first one's 0, and that's green, and then we have a 0.382 set to yellow, then a 0.5 set to yellow, a 0.618 set to yellow, and then for the take profit levels, we have a minus 0.382 for green, and then this one here set to 1. So we'll be using this to mark out certain levels, and then from there we'll be using these 3 yellow zones as our golden zone for a retracement, and then we will be using these green lines for our take profit. Now, if I flip this around so it looks it's a bit easier for you to understand. Can I pull this down? There we go. So these green lines right here would be our take profit, and I'll be marking out the high with this and the low with this. And essentially we want price to make the high and the low, and then to retrace down into this zone right here, and that will give us our indication to buy, and then we will be taking our trade up, and our take profit will be here. I could essentially turn this one off now because I've not really used this for quite a few months, but you know, it's always handy to be on there. And like I said, if you do want to take them longer trades to get a higher risk to reward, then I'm going to show you a strategy for that in a minute. Okay, so let me cherry pick an example of a trade that I took. This is one here. That's one. Let me just get a nice clear one. So this is a sell right here. Yeah. Yeah. Go on then. Go on then. I'll use this as an example. It's not the cleanest of examples. This was a trade I took last week on the Friday the 29th of March. But essentially what we'll be looking for, now remember this is still the previous strategy, but there's been some spins and some flares added to it. But you can see for a sell trade, we want to see the blue EMA cross down below, which is right here. If I just zoom this up, we can see right here very clearly that the blue line has crossed below the 50, the blue 50 EMA has crossed below the 200 EMA. And from here, we want to see a pullback, a very clear pullback to the 200 line. Now, it does actually happen here. This is technically a pullback with the wick. So there's 1, 2. This is very clearly a pullback. 3. So there are 3 pullbacks to the 200 EMA. But notice how I haven't entered a trade at this point, and I've actually entered a trade here. This is because I do not trade during the Asian session. I can't remember now if I mentioned this in the previous. I don't think I did, but if I did, then you already know that I don't take trades during this time. I take trades during the London and New York sessions, which is essentially the rest of the day for this time frame. And you can see how little the volume is during this box versus when it breaks out, and how much volume we have for the rest of the day. It's absolutely up and down following. And then afterwards we have this massive downtrend with this huge candle right here. To finish out the day. But going back to what I was saying, we can see we have the 50 crosses below the 200, and then we have price that pulls back, but we can only be taking these pullbacks seriously if it is during the London or New York session. These aren't valid. Sometimes you will see it'll pull back to the 200 during the Asian session and then just take that, just you know, rock it off to the downside, and it'll keep going. And by the time the London started, and by the time I've woke up in the morning, the trade is already gone. You know, that happens plenty of times, but that's where your trading psychology comes into play. And, you know, it's important that you don't get FOMO when trading. Your psychology needs to be absolutely on point. And only when these trades rules, you know, set up and allow themselves to be visible to you, that is only when you will pull the trigger on these trades. So 50 crosses below the 200, moves to the downside, and then price pulls back to the 200 line. From here, we want to see a clear rejection or just some sort of either wicking going on, or if there isn't any wicking, then we want to see a reversal pattern, which is, you know, one candle going up and then one candle going back down. This is just to show a clear rejection off the 200, but we can see here that price pushed beside. If I zoom in a bit more, price pushed past the 200 EMA and then didn't have enough momentum to carry on, so it pulled back and almost stopped at the 200 line. So this is why I entered the trade on the close of this candle right here, essentially on the open of this, and I'm glad I did, because I would have missed out on a lot of profit with this huge red candle here. But essentially what we'd have done, if I zoom the thing out a bit more for you, we'll be using this Fibonacci retracement right here to mark out the previous high. Sorry, I got a cough. The previous high and the low, to mark out where the golden zone on the Fibonacci is. So this is the most recent high right here. So click there. and then we're essentially moving this point until we see a pullback to the 200. So you'd have been so you'd have left it here, and then you'd have kept pulling it with this huge wick. We do definitely include wicks. This huge wick, we then would have left it here, and then price would have came back and then made another wick. So we'd have pulled it back down again, and then price continues, and it seems that it respects that zone. It's no longer pushing down anymore, and price has now came to a valid area where it hits the 200. So this confirms that wick line right here. So this is the lowest point, that is the highest point, and we can see we have these 3 yellow lines which represent the golden zone. Now price either must enter the zone or wick inside it. We can see right here that the green candle, there we go. We can see right here that the green candle has wicked inside of this golden zone right here. Not by a massive amount, but it also shows a rejection off the 50% of the Fibonacci retracement, which is a very healthy sign for continuation. So from this point, I entered the trade and I set my stop loss at the halfway line of the golden zone. And from here, sorry, I've got a proper cough at the minute. I don't know what's going on. But from here, we would then set our take profit either right at the point or just a little bit before this green take profit line. And as we can see, we hit a 2.33 risk to reward ratio. Okay, so that is an example of a sell. Let me just open up one of the other charts. I want to show you a clear version of a buy. There we go. Right, here's one right here. Is that the only one? I believe it was. Let's check this one out. Oh, right. So we can see for the upside, it's just it's just flipped around. And by the way, don't be discouraged by this this bad trade here. There is a bad trade. No matter the strategy, it does not matter. It does not matter. And essentially, the only thing that win rate really affects is just psychology while trading. You can make money with a 10% win rate. You just need to have a really, really high risk to reward ratio. But don't be discouraged by bad trades. They're very, very important, and every bad trade is a lesson. Bad trades used to bother me back when I was trading beat the market maker strategy, and it bothered me a couple of years ago, but it does not bother me anymore. I keep these charts open. I check the couple pairs that I'm going to share with you in a bit, and then I go about my daily business. Just don't worry about what's going on. So anyway. We can see we have the 50 cross above the 200 EMA line. It then pulls back, and we can see it actually rejects off of the 200 line. So if this wasn't during the Asian session, we could enter on the close of this candle right here, but it is during the Asian session. So we will then wait until time is valid for taking trades, and at that point price would be up here, so we wouldn't be looking to enter. But then a couple hours later, we see this massive pullback down here, and it almost rejects off of the 200 line. But because my stop loss space was so big, let me draw the Fibonacci so you can see what I mean. Okay, so yeah, so what I mean by that is even though this hasn't actually touched the 200 line, it's just wicked down to it and then started to pull back. I'm happy to enter this trade right here. I have been doing this quite a few years. I do recommend only taking trades that have actually made contact with the 200 line or came below and then wicked back above. But I was happy to enter this trade because of the massive size of the stop loss here, and I decided to set it around this zone. I just pulled it a bit closer because the stop loss is rather large, and we want to make as much money as possible per trade. And then this was set at the top of the take profit line, and we hit this trade for a 1.4. Okay, so I'll go over these trades and everything that I took from last week. I didn't actually trade this week, but I will show you all of the trades I took last week shortly. But I do have some tips now for this strategy that I've from the previous course. This right here so far is pretty much the same information, just spruced up and updated a bit. I'm now going to start adding some golden tips, some things that I've learned during my time trading this, and then the whole scalping strategy, and then a bonus with the scalping strategy, and like I said, then in a minute we'll go over some live trades that I've taken. Okay, so one of the tips that I'm going to tell you is when I first started doing this, I used to have every single Forex pair. I mean, I still technically do have all of them here, but I used to flick around between every single one of these charts, just jumping through all of them, and just there's so many pairs, and especially if you add a little bunch of different stocks in, and you add like cryptocurrency pairs in, it's very chaotic. There's just so much going on. So one thing I would recommend when you're first starting out, and this is exactly what I do right now, you see these 4 green ticks or these green flags right here with these pairs. These are the only pairs that I personally trade. So if you can't see it, I trade GBP USD, which is GU, the pound dollar. And then I trade GBP JPY. And then I trade Euro USD, so EUR USD, and then Euro JPY. These are the only 4 pairs I focus on. These are the ones I have had the best results with. You might have other results. Some weeks one of these will do really bad and the other 3 will do very well. And you start to critique that one pair and think, should I take it out? But then, a week or 2 will go by and suddenly that's the best hitter out of all the 4 pairs. So it's entirely up to you what you trade, but these are the 4 pairs that I focus on. I don't check any of these other charts. I only check out these charts when I'm doing my back testing for YouTube strategies. But these are the 4 pairs that I trade, like I said. And the other tip that I would definitely mention is that for doing these trades, I actually start trading at 7 AM UK time. You don't have to, but this is the time that I start focusing on trades. The London session actually starts at 8 AM, so I'm essentially taking trades 1 hour early. Not always, but you will find that trades will have really good setups and play out very well when on the 15-minute chart for the 7:30 AM candle. Now this would mean that just from a half an hour window, you're missing out on a lot of profit being left on the market. For the longest time, I stuck to the 8 AM rule, and I was still profitable in the long run, but I just felt like I was missing a lot and I was leaving a lot of profit to be made on the table. So I changed my time frame from the 8 AM to the 7 AM. I actually trade most of the day because I'm on the 15-minute chart. It's a very slow process. And when I wake up in the morning or before I go to bed, it's almost very clear what trades are going to play out. Just based on where the 2 EMAs are playing out. And you'll get to a point where you can see an EMA's crossed and you can tell straight away by looking at it if price is even inside that golden zone for entry. So sometimes you don't even have to draw the Fibonacci because you can just see straight away that, like, if price has climbed way too much after the cross of the EMAs and then pulls back to the 200, but at this point the 200 line might be at the level of where the green take profit line is, if that makes sense. But yeah, so I trade at 7 a.m. and I'll pretty much trade the full day. I would recommend not taking trades over the weekend. You can do if you want. Some funded prop firms don't allow this. Some do. But I've just found that, with news and like Monday mornings, you get all this like burst of energy into the market after the weekend. And a lot of times, if I've opened a trade, Friday morning, Friday afternoon, and then by the end of that day, the stock market has plateaued. And then come Monday morning, you get this huge burst of volume. And usually with them spiking candles, your stop losses get hit. And it is annoying. Plus, not to mention, over the weekend, you want to be relaxing. You don't want to be thinking what's going to happen Monday morning, when that trade plays out. And definitely, I would recommend avoiding the news. There is a website you can use. I've actually forgot what it's called because I don't really use it anymore. But Trading View. Got there in the end. But Trading View will show news notifications down at the bottom. They're very handy, but so you can just see on the timeline. But it's best to try and avoid news that is relative to the Forex pair. So this pair that I'm on right now, GBP JPY, it's best to try and avoid news based around the British pound and the Japanese yen. And I would also recommend the US dollar because generally that has an effect on a lot of pairs. Sometimes a lot, sometimes none at all. But just try and play it safe. Yeah, so there's some of the bonus tips I've added. So let's check out some of the trades that I've taken from last week. Okay, so we'll start at the top of the list. Let's go to GBP USD. Let's close that and let's zoom out a bit. Okay, so we can see we have the day markers here. Thursday, Friday, and then Monday. This is the 25th of March. And right here, we can see that we have a 200 EMA cross. But I can tell just by looking at this that this isn't in the golden zone. Watch me be wrong right now. But no, like I said, let me just pull this back so you know where I'm doing it to. So here's the high before the cross. And then this is the lowest point that price got to. So, so we've been moving this down. Maybe we thought it was going to be here and price would pull up, but it didn't. So we kept moving it with price, moving. And then this was the lowest point in the market. And then when price pulled up, it definitely wouldn't have been inside this golden zone, which was right there. Price only actually came up to here and didn't come inside. So we wouldn't have taken a trade on Monday. Well, I didn't take a trade. On Tuesday, however, the following day, we had a cross and then price wicked back down to this 200 EMA line. Oh, this is a small trade. Let me zoom in for you. Yeah, price wicks down here. And then this was the high point right here. So, but like before the pullback. So on this one, we caught a 2.43%. And then the following day, we had the cross. Price moved down to here, made the pullback, and we entered right here and got stopped out on this final wick. Right before, very typical this trade, we had this tiniest little wick at the top just to take out my stop loss right before price coming down. And, if it didn't do this, then it would hit my take profit. But who cares? It's part of trading. Following this on Thursday, we didn't have a trade. And then on Friday, to close out the week, we did a 2.33%. This was the example I showed before, with the price crossing here, the EMAs crossing here to the downside, and then with the pullbacks during Asian, which didn't count because they were during this blue box. And then the first pullback outside to the 200 was right here for a 2.33 risk, for a 2.33 risk to reward ratio. Sorry about that. My throat is very, very dry, but we live on. Okay, so that was the trades for for this week. So let's go and check out the next pair. So on GBP JPY that week, and like I said, these were all last week. I didn't actually trade this week because I was away. Where am I at here? Yeah, so this is the Monday here. This point right here. So we have the cross, but this trade isn't valid, and you can see why, because the high is all the way up here, the low's all the way down here. So the golden zone would be around this zone, but the 200 EMA is down here, so there's no point even looking at it. But this is the Monday right here. There's no crosses during this time, nothing. This isn't valid based on what I mentioned. So no trades Monday. On Tuesday, we have a 1.4 risk to reward ratio with this cross, the pullback there, which doesn't count. I showed this a minute ago. And then we have this wick down, which maybe could have took us out if it was a lot bigger, but it didn't. And then on Wednesday, we actually took a trade right at the end of the night. To be honest, I think I saw how big that risk to reward ratio could have been. So I decided to take the trade, but to my better judgment, it got stopped out. But it's only a 1% loss. That's a good point to make. I only use a 1% risk per trade. And then nothing Thursday. And then, although this was technically Thursday, Friday, Wednesday, Thursday. But yeah, no trades opened on Thursday, and then no trades opened on Friday. But we finished this week with a 0.44% increase on the account. Moving on, we have the Euro USD. So there was only 2 trades for this week. We have the Monday, nothing's going on there. And then Tuesday we have the loss, which could have been a 2.21. And then this is a lovely little trade right here. We have the cross. You'll find with this strategy that the crosses are usually on the night before, like very close. Like this cross was at 8 PM on the Tuesday. And then Wednesday it came through. A London Open, it came down, pulled back, and then we have this lovely rejection right here with a red candle wicking down. Wicks are very important to see because it shows like where price is losing momentum and strength in the market, and where buyers and sellers are actually wanting to buy and sell. Yeah, so this green candle was absolutely huge. You could have taken this trade here, but I just decided to wait for this one more candle. Let me zoom in a bit more so you can see it. And with this red candle right here, in the previous strategy, I did used to mention that we wanted to see price for a sell close back below the 200 EMA. I no longer do that anymore. A lot of the times I've noticed when this happens, like right here, price will actually push down quite a lot, and a lot of the times you will leave a lot of money on the table. If I say, for example, if we entered right here on this actual candle and on my previous rules, which is waiting for the close below the 200, we'd have been all the way down here for a negative 0.85 risk to reward ratio. Now, I don't know. sorry, my throat's dry. But yeah, for a 0.85 versus a 2.21, I think we can all agree on which trade we prefer. But yeah, so this trade on the Wednesday played out nicely for us, and that closed out the week for Euro USD. Nothing Thursday and nothing Friday. So the last pair I trade is the Euro JPY. Let's check this one out. Oh, I think I've I think I've actually deleted. Or was there no trades? I'll tell you what. Let's check it out. Okay, so this is Monday. So this was that week. There was either no trades. I can't remember, to be honest, but there was either no trades or I've deleted the drawings. So let's check it out. So this is Monday morning. We currently have this cross right here. So if we use the fib, and this is a great example to show what you'll be doing. This is just, you know, in a times 10 speed. But so the morning you wake up in the morning and you can see we have the cross. This is to the downside, so we're expecting sells. So we get out our Fibonacci, mark the high, which is this point right here. This is any high or the most recent high for a sell, but just before the cross. Sort of the closest best high you can get right before the 50 crosses below the 200 is the sort of best optimal zone you can use for the Fibonacci. So we mark out here, and then from this point, we'll be dragging it down to the lowest low point, which is right there. But the chances of us moving this are quite likely. So let's carry on. And here we can see we are now into the optimal trading zone. This, as far as I'm aware, is locked in. It doesn't, unless price pulls back even more before touching the 200, then we might end up moving this further down. But right now, this is the zones that we're working with. So let me just go a bit slower, because we want to see, right, okay. So right there, I would have probably taken that trade based on the amount that it has moved up. But I would have taken it right on the close of this previous candle. Yeah, so my close right here, that is where I'm entering a trade. You can see it's touched. I don't know if it's not actually entered the zone, but it is bounced off. If you're doing this strategy, I do recommend you taking trades inside the zone, but the bounce off, for me, how long I've been doing it, is valid. And we can see this massive, massive wick with almost no candle left. Tells me that price doesn't want to go up there, at least for this candle anyway. So I'd enter a sell here. And then if I zoom out a bit, we can see this is the take profit level right here. So I want a nice safe trade. So I'm going to pull it to the midline of the golden zone, giving us a potential 2.27 risk to reward ratio. So let's play this trade out. And there we go. This trade hit stop loss. Do I care? Absolutely not. All part of the business. So we then move off, maybe even cross out the Monday for this pair for trading. But it looks like it's going to cross again, and it does. But the new day starts. So like I said, the crosses always happen at the end of the day. So we want to get into the London session, which there it is. Okay, so let me delete this previous fib so you don't get confused. And from here, I'm going to mark this point right here because we have this low right here and we need to mark out a low before this cross. Generally, I like to have a low below the 50, if that makes sense. This is why I'm not using this point here as a low, because it's inside the 50. So this would be where I'd mark it. You can do it here if you want, but this is, you can see a general line. If I change this to a line, we can see that this is the low, price moves up and then pulls back, making a new higher low, and then carries on again. So move that back to candles. So this is where I'd mark it. And then this is the high we're working with right here. So let's see what happens. Because of where the 200 is, we are looking for price to sort of break below this 200 line into the golden zone and then exit the golden zone for an entry. It may happen, it may not. Let's see. Oh, straight away it does. Okay, so straight away we have this huge sell candle, and it wicks inside the golden zone, breaks the 200, and then closes with a bit of rejection off of this area. Let's enter the trade. I'm going to leave. Let me see what the risk to reward is. 2.27. Yeah, so I'm going to leave that there. We just put it. There we go. It's the same place. So this is the trade I'm working with. Let me clear the fib. If it hits stop loss, it does not matter. But we'll see. And lovely. So we can see in just a couple of candles, this trade actually hit. And we opened the trade at 8:15 AM UK time. It's absolutely lovely. So this was the Tuesday. Monday loss for a 1%. Tuesday gain for a 2.27. So far for this week on this one pair, we are up 1.71%. Let's carry on. Yeah, nice and clear for you. And essentially, we're just waiting and watching for these 5,200 cross of the EMA. Almost crossed there, but it didn't. And we have a cross right there. So this is a very clear high right before the cross. And this is on the Wednesday now. So let's mark this high, and let's just keep pulling this Fibonacci down and see what it does. Might pull this, make these candles just a little bit slower, because it was a bit chaos on ×10. And let's see what it does. And you know, while this is live, you know, while this is going on, you're not sitting here for all of these candles watching these trades. You know, it's just you're doing your own thing. Leave the computer on if you want, or you know the Trader Edge, the TradingView app. You know, and just go and do your own thing. Just enjoy your day, spend time with family. On the 15-minute chart especially, you can just check it out every so often. You know, you don't have to be super observant. You do definitely with the scalping strategy that I'll share shortly. But this is essentially the more relaxed approach. So we have this touch here on the 200 EMA, but this is still inside of the Asian session, so we wouldn't be counting this. Let me click a bit more over. See where London starts, which is here. Okay, so from this point now, we are looking for, let me pull this over. Yeah, so we're still working with that low, which is this wick right here. The golden zone lines up with the 200 EMA being inside, which is good. This might be a trade, it might not, but we'll see what happens. Oh, this is actually give us an even lower low now, so we'll pull that down there. So right now this is the lowest low, so we pull the fib down again. And where's this going to go? So we're on a new day now. And price has gone even lower. This is essentially what most trading strategies are out there. It's a lot of waiting and watching. But in real time, you'll just be checking your phone every couple hours with a 15-minute chart. You know, if say around this time when everything's played out and set up, you probably will be checking it a bit, you know, every 15 minutes or something. But it takes 2 to 5 seconds to check the app and close it again, or to check your PC. But other than that, it is a very relaxed approach to trading. Okay, so where's this going to go? Is this going to touch the 200 EMA? Potentially. We're getting some wicks close to it. This was a pretty close wick right here to the line, but there's just a bit too much of a gap, so I just wouldn't have entered here. Just maybe. Do one more. Nope. One more. It's not looking like... Oh. Alright, okay. So this would have wicked, and if this was during the London session, then I probably would have entered right here on the close. But we've entered the Asian session. And this being on a Friday, means that we're not trading anymore. Okay, so there are the 4 pairs. I did a nice profit on the previous week. Let me see, where are they? I think I did have them all wrote down, but... right, okay. So last week on GU, we had a total... Is that the 3 trades? Yes, we did, yeah. So let me just bang the calculator out quickly, because I'm absolutely horrible at maths, the irony. So 2.33, there we go. So overall for last week on GU, profit for this on this trading strategy was 3.76 risk to reward ratio. So with me risking a 1% per trade, I made 3.76% on GU. On GJ, do I have the numbers wrote down? I think I do. Yep, so on GJ I made 0.44% profit overall on the account, just with that -1 taken off the top. And then on EU, did I write it down for EU? I didn't. We had a 1% loss, and then we had a 2.21 gain, giving us a 1.21%. Giving us a 1.21 risk to reward ratio for the week, and yes, a 1.21 profit gain. And then on the EJ, why does TradingView always do this, by the way? Why does it always enlarge? Someone knows, let me know. Where are we? Was it just this one? This one trade? No, it wasn't. It was these here. Hard to see without the tick. So we had the 1 loss here for the -1%, and then we had a 2.71% gain on the account. So overall for the last week on EJ, we had a 1.71% gain in profit. Now the EJ had the lowest profit, I believe, for the week, yeah, with the 0.44. But every single pair on this strategy last week made money. Every single pair. You know, if you want to see a higher win rate, or if you're battling with your trading psychology, I understand that, but that is just something that takes time to hone and master your craft. But ultimately, all it comes down to is making money. That's why we trade. That's why we do this. And yes, we would like to make more money more often, but sometimes you make money a little bit less often, and all that requires to make more money is just to increase the lot size with a larger account. Definitely go with a prop firm. A lot more emotion comes into it when you know you're actually risking hard-earned money. Still to this day, I trade a prop firm. I do not just trade live accounts for my own money. I trade live prop firms account, and I trade with FTMO currently. I used to trade with My Fund and Talent a couple of years ago until they got in with the whole, the whole scamming thing and got taken to court and closed down. And I actually lost out on a bit of money that I had in my funded account at the time. But yeah, and now I'm with FTMO. I do recommend going with them. There's some other ones, some others you hear bad stories, and then on the other side of it you hear good. But FTMO is a safe place to trade, in my opinion. Okay, so now you've seen these trades. I've got an example. Let me see, actually, if any of the trades that I've shown can demonstrate this example. Let me see. Don't think they will. Sorry, I'm just looking for something. 1 second. I'm trying to keep this all in one video just so it's a nice long form content. It's, you know, it's all simple, it's all in one place, and hopefully it's a lot easier to understand for you guys. Let's have a look at this trade right here. So we can see price crossed above, not price, sorry, well, price did, but we can see right here that the 50 EMA crossed above the 200 EMA. Now I'm showing you this trade because this is an amazing example of this bonus. But we mark out the low right here, and then we'd mark out the highest point here. The London session opens, and we are then trading during the London and New York session on the 15-minute time frame. Now, if we zoom in a bit more, this is the golden zone from here to here. And we are, like I said, we are always waiting for the pullback. Now, for whatever reason on this trade, I didn't enter on this pullback right here, probably because it hasn't actually entered the golden zone yet. Yeah, like we can see, if we hide these candles onward, like so, you can see price has wicked down and definitely rejected off the 200 line, but the golden zone is still down here, and we want to see price at least interact or enter it. So that's why I didn't enter there. And then a couple candles later, we have this massive move to the downside, and wow, look at that wick. And it closed above the 200. Absolutely perfect entry. And there again, we have the you know, the rejection. This is a railroad formation where the candle comes down and then comes back up to pretty much the same amount. But this is a wick rejection, and then we have the double candle rejection. And, you know, looking back on it now, I would have definitely entered on the close of this candle for a little bit more pips. Not a massive amount more, but it all helps. But obviously we can see that this trade was profitable. I'll fast forward it again so you can see it. But the way that I take my trades is to using this green line right here as the take profit. And you know, it definitely has its ups, but it also has its downs. So this trade right here closed out for a 1.81 risk to reward, almost 2 risk to reward ratio. And that's all well and good. This is still profit. Absolutely amazing. You know, hard day's work. You know, this could have been a $10 profit. This could have been a $10,000 profit. You know, but this is where one of the bonus tips comes into play. You can take, and I do recommend doing this. It doesn't always work out, and you definitely will lose some of your profits doing this. But long term, you will make so much more money. It isn't even funny. I would recommend, when you're doing this strategy, having the green line for the Fibonacci, which was right here. And when price hits this, I would recommend taking 50% of the profit off the table, or 75% of the profit, and letting the other 50% or other 25% carry on running. And let me show you why right now. We pull this out and press play. We're going to be taking out the second partial for the trade and the rest of the trade when price closes back underneath and closes back underneath this 50 EMA line. Now this works absolutely amazing in trending markets, and like I said, it doesn't always play out. You know, you can put 10 trades on and it won't happen, but then you'll get that one trade come in that explodes, and some weeks you'll get a bunch of these at once, and it's crazy to see how much the account grows. But we can see right here with my strategy, or my previous strategy, we did a 1.81 risk to reward ratio. Now, if we took the 50% off the table, the profit, or the 75%. The more money you take off here is better long term, but with these huge spikes in profit, it definitely does add up. If we pull that right up to here, and then pull that over, this is the first point that price actually came below and closed below the 50 EMA, the 50 exponential moving average. This is the first time it closed below, and just based on this trade, we had our first partial for 1.81 risk to reward, and then our second partial for 7.5 risk to reward ratio. That is if this was a 1% trade, that is 7.5% profit in one trade. In the trading industry, it's so uncommon to see stuff like this. I think Warren Buffett, the infamous stock trader, I think he regularly does about 12% a year or something like that, or a month maybe. So to see this in one trade is absolutely insane. And I have caught some trades that have been even bigger. But yeah, absolutely crazy trades. I think I had another example of one. Was it? No, it wasn't that one. I thought it was on GU, maybe GJ. Oh, is this it? Is that it? No, but that is another example of a trade I took. So we can see right here, the first trade played out. We had the 200 cross, the pullback, and then I entered the trade right at the close of this candle right here. Hit the take profit line, which was right here. And we did this trade with a 3.43 risk to reward. Very beautiful trade. But I took out a 75% when this take profit was hit and left this other 25% of the trade play out. And this trade hit an 8.47 risk to reward. Them both combined is absolutely amazing profits. And it seems to hit quite often. We can see here I didn't take this trade. This is just an example. But during this... Actually, I don't even know why this is here. Because there isn't actually a trade set up. Maybe this is from backtesting and I've just not deleted it. But yeah, this was a trade I took. But yeah, absolutely amazing results. So let me go back on GU. I'm going to give you guys a lovely bonus tip right now. So if we go on indicators at the top, type in BTMM, which is the old strategy I used to trade, and add the TDI. Is it already up here? No, it's not. So if we clear out all this other bit super quick, just get rid of the background, get rid of the trend up and down, get rid of the, not the RSI, the Bollinger Band, sorry. Yeah, the volatility upper, volatility lower. And then we're going to want to leave the, the RSI trend line. And then we'll leave that. Change the RSI color to, change to green if you want. Just make it stand out. If we go down to the 5-minute chart, this is a super nice way to make money. Now, it might be hard for me to find an example here. It doesn't always play out, but when it does, it's very nice. If we pull up this BTMM indicator, we can see we have the green RSI line, we have the yellow market baseline. This is an overall, this is almost like a higher time frame version of the RSI. And then we have this 50 midline here, and then the upper line and the lower line. Now, for this strategy, on the 5-minute chart, this is a nice little bonus tip. We're using the same style strategy, but when the 50 crosses below and then pulls back for a sell, at the point of selling, it's very, very healthy to see this right here. This right here. So what can you see right here? You can see that both of the green and the yellow line are in the lower segment of the lower segment of the TDI. This is the 50 line. See this 50 line right here. If I make this a solid line, just so it's easier to see. There we go, that's better. The overall TDI, which is both of the green and the yellow line, have came to the downside here, crossed both under, and for this whole segment right here, they are both in the lower area, which means we are looking for sells. So if we saw the, like we can see there, the 50 crosses below the 200, and in concession we have the whole TDI in the lower zone. At the point of taking this sell, if we see the TDI come to the upside and spike off of this 50 level and reject at the same time, absolutely enter that trade. This is such a hidden gem for using the TDI. It's so useful. You don't need to see the Bollinger Bands, you don't need any other crap with any other stuff with the BTMM indicator. As long as you've got this RSI moving and the market baseline overall to show sentiment for the market, and then like this right here as well is perfect. We can see the TDI is below. So say if we had the cross and everything for the EMAs, price pulls back, it lines up with this. We can see that the whole TDI right here is in the lower side. And if I move one candle over again, look at that perfect RSI rejection off of the 50 level. If you see this, if you take a sell while scalping on the 5-minute time frame and see this exact TDI, take a screenshot right now. If you see this exact TDI, take your trade with it with complete peace of mind. It won't always hit take profit. I'm not going to sit here and say it will, but it validates trades so well. Let me show you a nice clean TDI version for a buy. This right here. Look at that. It's hard to see the upper lines as well. But there, look at that. So we can see that the TDI is, is bouncing around the middle. This is the 50 line, the middle. This is the line we focus on. And then the whole TDI moves to the upper zone. So right here is at this upper zone. There's no TDI in the lower zone. So this is an example for a buy for the TDI. Price is bouncing around. It then comes back down below. And then right at this point, you can see that the RSI green line for the TDI rejects beautifully off the 50 level. Look at that. Look at that perfect rejection right there. If it doesn't actually touch, then we want to see, if I zoom in a lot, we want to see where the 50 level is. We want to see a bounce between just 1 second. Yeah, we want to see the RSI rejection inside the, I believe, yeah, inside the, where is it? It's right there. We want to see it either reject right on the line perfectly, but that doesn't always happen, or 1 point above or 1 point below. So either reject right here for the RSI green line and bounce, or reject anywhere inside this line, and this line. Anywhere inside this area. So if price comes down, like, and the RSI line comes down and bounces here somewhere and then leaves, that is still valid. That is still okay. But Like I said, anytime you see that, that is a massive bonus tip for scalping with this strategy. It works absolutely amazing. Another thing you'll notice for this strategy with scalping is that trades will set up and play out at usually, not always, but usually between 8 a.m. and 11 a.m. UK time. So that 3-hour window from 8 a.m. to 11 a.m. That 3-hour window UK time. So type that in on Google and put, 8 a.m. UK time and it'll convert to your time, and then put 11 a.m. UK time, it'll convert to your time. And that, whatever that 3-hour window for you is, if you try and look for this 50 to 200 EMA cross with the pullback, and you see the entry signal is inside 8 a.m. to 11, and we have this TDI bounce right here, just like that for a buy. You can take a screenshot of that if you want. If you see that happen, this is such a valid trade to take, and you have so many confirmations for this signal. On top of this, we can also add, let me pull this down a bit. We can also add the twin range filter. Now this is a massive help if you are struggling, or FOMO or psychology is getting in the way and you're never actually sure on where you should be entering your trades. The twin range filter indicator with these settings I'm about to show you is such a useful way to take these trades without having to worry at all about when if you're getting in at the wrong time. So if I double click on this indicator, we can see the source is closed, the fast period is set to 50, the fast range is for 1.6, the slow period is for 35, and the slow range is for 3. Using these settings between 8 a.m. and 11 a.m. with my strategy, I've had really good results back testing with scalping. For whatever reason, it just works very well. You probably could use this on the 15-minute chart. Maybe not. You find that with buy and sell indicators, they usually miss a lot of the move the higher the time frame that you go. Obviously, we had a long trade paint there at the point of close. I mean, this was a bad trade anyway. There's a long one, but yeah, this indicator. If I type in twin range, spell right. Yeah, twin range filter, there we go, by Colin MCK. Absolutely very, very powerful indicator to use indeed for scalping on the 5-minute chart. But yeah, these are the sorry about that massive pause. I was just double checking my notes to make sure I've not missed anything. But I think that is absolutely everything. I do maybe plan on opening a Discord in the near future, just so that I can add all of you premium guys into like a private chat and just show the trades that I am taking on a daily basis, just to make life a lot easier for you. Or maybe maybe having like a private group or just something, because it would be cool to connect with you guys and talk. This isn't the best strategy in the world. It never will be. And that is why I've not charged $1,000 for this information. It's as cheap as trading courses come. This is the cheapest. I've seen some courses go for 10,000. I think the Beat the Market Maker strategy, the strategy I used to trade, I think that course went for, I think it was $2,500, which is a crazy amount, especially with the economy we live in and the way the world is at the minute. That is just too much money. I wanted to make a strategy that had as much information packed in at the best, for the best value for money possible. And I couldn't sleep at night knowing that I'd ever charge $1,000 for a course. That's absolutely crazy. But at the same time, I need to keep a paywall there to keep a lot of the naysayers out. And I only want the people that are serious about trading, and that is why it would also be great to have you guys solely in a private Discord group where you can talk to me, you got any questions, and you can see the trades that I'm taking. So yeah, I definitely want to sort that out in the future. But that's pretty much sums it up. It would be nice to share trades with you that I've done. But like I've showed you the last weeks, I didn't actually trade this week. Move that out of the way. Yeah, I didn't actually trade this week. This is on GJ. I'm on the 15-minute chart now, so let me get rid of the TDI. We have this EMA cross here, and then get rid of that as well. This pullback, this might have been, yeah, that was in the golden zone. So we could have put your stop loss up here because price has crossed over this middle parting. But this trade wouldn't have hit take profit anyway. Then we have this huge climb right here. We wouldn't have entered anything then. And then on Friday we had the cross, but the high was all the way up here. Oh yeah, but it was inside. And this trade didn't hit either, so I'm glad I didn't trade that week. this week. But like I said, with your psychology, no trading strategy is perfect. You definitely can get some strategies that work very well. There is a man called Trades by Sci. That's SCI. On, let me write out. Just I've got a dodgy accent. Trades by Sci. This is a guy that he's younger than me, and he trades exceptionally well. He has a very simple strategy. He makes a lot of money doing it. But he trades very, very well, and he has a simple strategy, and he has a decent win rate, but he very, very rarely takes trades. At least he trades on the daily time frame, I think, or the hourly. And I don't like being that slow with the time frame, so I trade on the 15-minute chart. And then if you want to be a lot more involved and spend more time with the charts, then the 5-minute time frame is for you. But I like my nice middle ground on the 15-minute chart. But it means I don't win trades every single time, but that isn't a problem. As long as you are profitable, as long as you are earning money. But the one thing that matters above every single thing else is that you are consistent and you trade every day you physically possibly can. If you've got work, fair enough. When I used to work at a warehouse, and on my break, I used to sit the entire time when I was eating my pasta or my sandwich. And the entire time I used to have MT4, MetaTrader 4 or MetaTrader 5 open on my phone. And if I didn't have those, then I had TradingView open. And I used to sit there and take trades during my break. And you'd find a lot of times you've missed good trades when you're actually working, and then when you go to check your phone, you've missed them. That's just the way trading is. That's just the way life is. You'll sit there for from, and I've done this plenty of times, Monday to Thursday, and there's absolutely nothing, or it's bad trades. So your emotions get the better of you. You think, I'm not trading Friday, and you either lie in, or you go out, or you go to a friend's, whatever, and you come back and check the charts later, and there's been 100 risk to reward ratio trade play out perfectly with all of your rules. It's just the way it is, but you have to, that's just something that psychology comes with, and you callous your brain as you go on, meaning that the more you do it, the less it bothers you, and you grow a thick skin to trading. But I have traded this strategy for a couple of years now. So if you want to make money, then if you trade this strategy as well with the rules, then there's no reason that you can't make money trading. There's no reason that you can't spend some time doing this one simple thing and, you know, eventually hand your notice in and quit your job. That's ultimately the goal. That's all I thought about every single day, until I was here and until I achieved it. You know, and some weeks are negative. Some weeks you're not in profit, but it's never by a lot. It's just sometimes you're just negative, but just don't stop, because you may be positive for 50 weeks of the year and negative for 2 of those. And you can still have a lot of negative trades during the weeks, but use your risk management and use your consistency to your benefit and make profit. One bonus I will actually give, which is separate from TradingView, there is a man called the Moving Average. He's in the trading space, but you've definitely heard of him, I imagine anyway. But he runs a company with a couple other YouTubers called The Trading Floor. They offer like a membership thing. I used it a couple months back. I don't use their indicators anymore. Not to say they're bad, they're just not. I didn't click with the strategies. But if you sign up for 1 month, and you don't need to, but they offer an indicator with their membership for risk management. And this is a plug-in to the MT4 and MT5 on the computer. But this is like the best calculator I've ever seen. So it's like a box. Where's the drawing thing there? It's like a box that'll set up on your screen up here, and you'll have like the buy and sell buttons. And essentially, when all you do is you go to click buy, and when you click buy for your trade, you'll have a line pop up for the where price is, and then you'll have a line drawn, a green line drawn for the take profit price. These pop up as soon as you click buy. These lines pop up, and then you'll have a line drawn for your stop loss. Now you can manually move these lines to wherever you want, but you can use on this display up here. Say if I put a 2 risk to reward ratio, wherever I drag this stop loss line, it will automatically move this take profit line to give me an exact 2 risk to reward ratio. So if I move that to there, then this will come down by itself to exactly twice the length, giving me a 2 risk to reward ratio. And then all you got to do is click buy again, or I think it's confirm order, and it will enter the trade. Super simple. Like I said, I'm not promoting the trading floor. They have some okay indicators, but that's not why I'm here. But that's one of the best things I ever took from signing up to that membership, was this calculator that is implemented into MT4 and MT5, and it works very, very well. Especially if you're trading on the lower time frame, when there's not a lot of time to, you know, enter these trades and try and quickly work out risk to reward and you know, enter prices. And by the time you've done it all, you know, price has moved, especially on like the 1 minute. But on the 15 minute, it's a lot more relaxed. But I hope you have enjoyed this trading course. I know I've rambled a fair amount. This is definitely a different type of style than I usually do. I usually like to make short and snappy content on YouTube. But I just wanted to try and sit down on a more personal level and try and give you some of my insight. And I hope you have taken some from this. I hope you've gained from some of the benefits. But overall, I don't plan on changing from this strategy. I don't plan on releasing another course unless some drastic things change. But I really don't plan on releasing another one. I think this will be my last one. And from here, I will focus on maybe developing some indicators in the future for free. And, you know, just giving you guys as much content as I can provide you with. But thank you very, very much for, you know, taking the leap in your trading strategy. As long as you are consistent, You won't have any problems with this. I mean, I don't have any problems with this strategy. So if you're consistent and you're safe with your risk management, there is no reason that you can't be profitable. So I hope to see some lovely comments in the next 2, 3, 4, 5, 6, 7, 8, 9, 10 months away from you guys saying that you joined the course and that you've now quit your job. I get messages on Instagram about seeing gain in profit, and it makes my day to see that I've actually been able to help people. So I hope I help you too with this strategy. My name is Mo again, and I look forward to seeing your results, and I look forward to seeing you on the YouTube channel for future uploads. But thank you very much. I'm going to now relax for a bit. I'm definitely going to get a drink because I've got a very dry throat. Don't usually talk this much. But yeah, keep an eye out for the Discord in the future. Turn on the notification bell for the YouTube channel so you can see all the future updates. You never know, if you're trading this strategy, you might find an indicator or two that I share, and the penny might drop with something and you might be able to interpret the two. But if you've got any suggestions, anything at all, let me know. And thank you very much for watching. Thank you very much for listening to me ramble for however long this has been now. But thank you again, and I will see all of you beautiful people on YouTube. Take care, all the best, and I will see you all in the markets.